90% of first deposits vanish within 72 hours of trading. Not because the market is impossible, but because nobody warned you first. I watched my own account hit zero in under 5 minutes once. Today, I expose exactly how brokers are engineered to beat you fast. By the end, one simple rule could save your entire deposit forever. My name is Austin. I traded 6 years before anything finally clicked. I turned a $300 account into real, consistent income. Not luck, just 3 protections brokers hope you never discover. So why do brokers profit, even when your trades lose money? Every trade you open costs you the spread, win or lose. That tiny gap between buy and sell price is pure broker profit. On Eurodollar alone, that gap drains your account every single trade. Trade 50 times a week, and the spread alone eats your deposit. Some brokers even trade against you, called a market maker model.
Your loss becomes their direct profit. No middleman, no hiding it.
Other brokers route your order instead, called ECN or STP execution. But even those brokers profit more the longer you keep losing. Here's a stat that should scare you. Leverage causes most blowups. 500 to 1 leverage sounds powerful, but it's a trap. It lets you control huge positions with almost no money down. One small move against you and your entire deposit disappears instantly. I once opened a position 10 times bigger than I should have. Pound dollar moved 40 pips and I lost half my account. That single mistake taught me more than a year of winning trades. Rule 1, coming later, fixes leverage forever, so keep watching closely. But leverage is only trap number 1 of 3 broker built. Trap 2 is psychological, and it's far more dangerous than leverage. After a loss, your brain wants revenge, immediately on the market. So you open a bigger trade to win back what you lost. That bigger trade loses too, because emotion replaced your actual strategy. This cycle is called revenge trading, and brokers count on it. Your first deposit rarely dies from 1 trade, it dies from 10. 10 emotional trades stacked in a single afternoon of pure panic. Ask yourself, have you ever traded angry just to feel in control? If yes, you already met the trap that empties most accounts. Trap 3 is the dashboard itself, designed to keep you clicking. Bright green buttons, instant execution, no friction between impulse and loss. Brokers do not want you to think, they want you to click. Compare that to a professional trader who waits, plans, then executes. The dashboard never shows you your win rate over the last month. It only shows today's chart, tempting you into one more trade. Here's something most beginners never hear. Brokers profit from your boredom. Overtrading generates commissions and spread, even when you lose consistently. So the platform is quietly engineered to keep you trading non-stop. Dollar yen, gold dollar, euro dollar, every chart begging for one more click. Traders with 5 charts open lose money nearly twice as fast. So 3 traps: leverage, revenge trading, and constant dashboard temptation. All 3 drain a first deposit inside the very first week. Now, here's the counterintuitive part professional traders actually understand deeply. Losing trades are not the problem. Unprotected trades are the problem. A protected loss costs you almost nothing and teaches you everything. An unprotected loss can end your trading career in one afternoon. So how do professionals actually protect a small starting deposit properly? It comes down to 3 specific rules I use on every trade. Rule 1 sizes your position, and skipping it alone kills most accounts. Rule 2 locks your stop loss in before emotion gets a vote. Rule 3 balances risk to reward, and I'll prove it with real numbers. I'll show you my exact MetaTrader setup live in just a moment. But first, understand why most beginners skip these rules completely. They feel boring, slow, unnecessary, when the market feels exciting instead. Excitement is expensive. Discipline is the only thing that actually pays. I learned this the brutal way, staring at a zero balance screen. That screen changed how I trade for the rest of my life. So let's break down exactly what protects your deposit, starting right now. Open any chart and you'll see candlesticks moving up and down constantly. Each candle tells a story of buyers and sellers fighting for control. Professional traders read that story before ever risking real money. Have you ever entered a trade purely on gut feeling, no real plan? That exact guessing habit is what part 2 is going to fix. We're heading into position sizing, stop loss placement, and entry zones next. This next section alone could double how long your deposits survive. I break down these exact setups daily inside my own trading routine, so don't skip the next part. It's where deposits are actually protected. Let's open the charts and build your very first protected trade setup. Now here's exactly how you avoid every trap we just covered, rule by rule. Rule 1, position size. Calculated before you ever touch the buy button. Never risk more than 1% of your account on any single trade. On a $500 account, that's just $5 of real risk. Not $5 per pip, $5 total, no matter what happens. Here's the formula. Account risk divided by stop distance equals lot size. Sounds technical, but MetaTrader calculates this for you in seconds.
Open the position size calculator right inside your MetaTrader 5 platform. Enter your account balance, your risk percent, and your stop distance. It instantly tells you exactly how many lots you're allowed to trade. Most beginners skip this and just trade a random lot size instead. A random lot size means a random amount of risk every trade. Random risk is exactly how one loss becomes an account-ending disaster. So before every single trade, run the calculator. No exceptions, ever. This one habit alone separates survivors from the 90% who vanish. Rule 2, stop loss placement. And this is where most beginners fail. A random stop loss is just as dangerous as no stop loss. Never place your stop based on a dollar amount you feel comfortable losing. Instead, place it based on market structure, beyond a real support level. Open TradingView. Find the last swing low below your entry point.
Your stop loss goes just beneath that structure, not some random number. That way, the market has to prove your idea wrong to hit it. A structure-based stop loss also filters out weak, low-quality trade setup. If the stop distance is too wide, your position size shrinks automatically. This keeps every single trade at exactly the same 1% risk. Rule 3, risk to reward. The ratio that decides your long-term survival. Never take a trade risking more than you could realistically gain. My minimum is 1 to 2. Risk $1 to make 2. At that ratio, you can lose more trades than you win and still profit. Win just 40% of your trades at 1 to 2, you're profitable. That single math fact is why discipline beats being right every time. Calculate risk to reward before entry, never after you're already in. If the reward doesn't justify the risk, you simply skip the trade.
Let's build one real setup together, live, on my actual MetaTrader 5 chart. Gold dollar just pulled back into a clean support zone on the chart. Entry goes right here, where buyers have defended this level twice before. Stop loss sits just below that structure, a few pips of breathing room. Take profit targets the next resistance zone, giving a healthy 2 to 1 reward. Position size calculator says 0.12 lots keeps risk at 1%. I share setups exactly like this one every single morning for free. You can follow along live inside my Telegram channel called FX Austin. Every trade idea, every entry, every stop loss, posted before the market opens. No paid course, no upsell, just the exact charts I'm trading myself. Search FX Austin on Telegram and you'll see today's setup within minutes. Thousands of traders already use it to double check their own analysis. All right, back to the chart because this trade is about to play out. Price enters our zone and the position fills exactly where we planned. For a moment, gold dollar pushes higher, right toward our take profit. Then, unexpectedly, a news headline drops and price reverses hard against us. This is exactly the moment an unprotected trader would panic and freeze. But our stop loss was already placed, so the platform closes it automatically. Loss taken, small, controlled, exactly 1%. Nothing close to painful. No revenge trade, no emotional spiral, just a normal, planned, protected loss. That is the entire difference between losing money and losing your account. How many of these next 4 mistakes have already cost you money? Mistake 4, trading straight through major news events without any protection. Price can spike 50 pips in seconds, blowing past stops entirely. Check an economic calendar every morning before opening a single trade. Mistake 5, moving your stop loss further away once price goes against you. That single habit turns a small planned loss into a massive unplanned one. Once your stop is set, it should never move except to protect profit. Mistake 6, pair hopping constantly, chasing whatever pair looks exciting right now. Master 1 or 2 pairs, since chart hopping wrecks more accounts than leverage does. Mistake 7, fighting the higher time frame trend just to catch a quick bounce. Every professional trader keeps a journal, and almost no beginner ever does. Write down every entry, every stop, every result, win or lose. Patterns appear after 20 trades that you'd never notice trade by trade. Before risking real money, stress test every single rule on a demo account. Skip this, and even the winning trade in part 3 won't save you. Most brokers let you open a free demo account in under 2 minutes. So here's your actual plan. Starting today, before you deposit another dollar. Demo trade these exact rules for 2 weeks, tracking every result honestly. In part 3, I'll show you the exact winning trade this builds toward, plus the daily habits that keep your account growing long after this video. You saw the losing trade. Now watch these exact same rules win. We're back on euro dollar, running the identical 3-rule strategy again. Price pulls into a clean support zone, exactly the setup we studied. Entry marked, stop loss placed beneath structure, target set at resistance. Risk locked at exactly 1% before a single candle even closes. Now we wait, because waiting is part of the actual strategy too. Price taps our entry zone and the order fills exactly as planned. The first candle after entry closes green, confirming buyers stepped back in.
No emotion here. The stop and target were already locked in place. Price climbed steadily, pushing through the first minor resistance without hesitation. Halfway to target, and I haven't touched the mouse a single time. This is the boring part nobody shows you, and it's the important part. Price finally reaches our take profit level, and the trade closes automatically. Profit locked in, 2% gain from a trade risking only 1. That's the entire point of risk to reward, doing the math ahead. One winning trade like this recovers 2 losing trades from earlier easily. Consistency, not luck, is what actually built that green number on screen. Now compare this win to the loss we took earlier in the video. Same process, same rules, same calm reaction, completely different final outcome. That's the secret nobody tells beginners. The process matters, not the result. You can follow the process perfectly and still lose an individual trade, but followed consistently, that process protects and grows your account over time. So what does a disciplined trading day actually look like in practice? It starts before the market even opens, not the moment you feel excited. Check the economic calendar first. Mark any high-impact news for the day. Review your higher time frame chart. Decide the overall trend before anything else. Mark support and resistance now, before panic decisions creep into your trading. Write the entire trade plan first. Skip this, and emotion makes the call. Entry, stop, target, size, locked in advance. Improvising here is how accounts die. Only then do you open MetaTrader and wait for price to arrive. If your setup doesn't appear, you simply don't trade that day. Period. Most beginners trade because they're bored. Professionals trade because a plan triggered. Every night, log the trade. Win, lose, or nothing. No exceptions allowed. Once a week, dig through every trade. Honestly, no excuses, no editing. One mistake almost always repeats quietly. Your journal is the only way to catch it. This single habit teaches you faster than 100 trades ever could. Here's a mindset shift that changes everything. Stop trying to be right. Being right feels good, but it's not what makes money over time. Following your process, even through losses, is what actually makes money. The traders who survive aren't the smartest. They're simply the most consistent. Consistency feels boring, which is exactly why most people quit too early. The ones who stay boring long enough are the ones who get paid. Let's talk realistic numbers, because hype videos love to lie about this. Risking 1%, aiming for 2, you don't need many winning weeks. 10 trades a month, modest win rate, and the math compounds quietly. 2% monthly on $500 sounds small. Here's why it isn't. But compounded over a year, disciplined risk quietly turns into real growth. This won't make you rich by next week, and anyone promising that lies. It will, slowly, turn you into someone who doesn't blow up account. That skill alone is worth more than any single lucky trade ever could. So here's exactly what to do the moment this video ends today. Open a demo account and practice these exact rules for 2 full weeks. Track every trade in a simple journal. Entry, stop, result. No exceptions. Only move to a real small deposit once your demo results stay consistent. And if you want daily help while you're building that discipline, I'm here. Every morning, I post my actual trade setups inside my Telegram channel. It's called FX Austin. Completely free, no upsell hiding behind the free part. You'll see my entries, my stops, my exact reasoning before price even moves. You can compare your own analysis against mine and see where you differ. That comparison alone will speed up your learning curve dramatically, trust me. Search FX Austin on Telegram right now before you forget this entirely. Thousands of traders already track their setups alongside mine every single morning. It costs nothing to join, and it might save your very first deposit. The link is also right below this video if that's easier for you. Come say hello, share your first demo trade. I actually read every message. This community exists because I don't want anyone else hitting 0 like I did. Your first deposit doesn't have to become another statistic in that 90%. You now know exactly what drains it and exactly how to protect it. Leverage, revenge trading, dashboard traps. All 3, you can see them coming. Position size, stop loss, risk to reward? All three you know how to use. The only thing left is actually doing it, starting with a demo account today. I'll see you in the next video, and hopefully inside FX Austin too.